Hey everyone, welcome back to Crypto Cash. Thanks again for joining me here. Hope you're having a fantastic day. Happy Friday to you once more. Quick update from our avalanche analysis earlier today. Does look like we have a slight pullback after a higher high. This is perfect. We want to be able to see that higher high. It did come all the way up to this 2175 level, that Fibonacci 0.5 level, and that's an important place to be. Okay, so again, just because we're pulling back right now doesn't mean it's dire straits. It's actually normal to have higher highs and higher lows. We've also got Elliott Wave telling us there is potential for a higher high here at this point. Okay, so again, it really depends on how you look at it, but generally speaking, smaller time frames are giving us some good forgiving information. So we'll talk about that and much more. And if you're new to the channel, just know I'm not a financial advisor. Truly do love to teach people to trade. Hope you can learn something here today. And obviously, you want to become a better trader, cryptocash.tech is a site linked down below. I've got Trading Academy and of course a wonderful community and university too. Be sure to check that out. If you're currently a community member, do not waste your time. Make sure you watch some of those videos there. Make sure you brush up on your risk tolerance and a few other key factors. So let's look at here avalanche. So the important thing we want to note here is we're right between two heavy concentrations of liquidation. Okay, so we got a lot of liquidation, probably twice as much at about 2260, 2270, and then of course down here as low as 1875 for the longs. So longs are at 1875 for the most part. Shorts are at about 2275. Okay, so we're almost smack dab in the middle, slightly closer to the top side there, but generally speaking, we'll see more liquidation. The price goes up than down. Okay, and the reason why that's important to note is because it's like a magnet, right? That's why I always use these to kind of get the point across. There's going to be a lot of concentration at specific levels. These are interested levels for market movers. They move it to that level, then they have free reign to be able to buy and sell or do whatever they want with the market. Okay, so again, you wipe out a bunch of liquidation, you all instantly have no opposing threat. Okay? And that's why they like to do that, because then they can manipulate the market and move it whichever way they want. So those are focal points for a lot of big market traders. Okay, so let's take a look here at the daily. We got a couple of gravestone doji candles kind of forming here. This isn't terrible, but typically you see two gravestone or just two doji candles in a row, and there's usually a reversal. And again, since we kind of bounced here, there is potential for further downside there. This isn't a 100% guarantee by any stretch. No candlestick pattern is, but it's something to be mindful of. You combine that with a MACD divergence, there is potential for the price action to come back down. Again, those are a couple of bearish signs. Taking a look at the moving averages though, if we take a quick peek, we are well above the 20-day SMA. All the more reason why the price could come down to retest maybe even this most recent low at about 1890. So just be mindful that while it is probable, at least on the smaller time frames, the price continues higher, the larger time frame is telling us a pullback would make sense. Okay? Again, keep that in the back of your mind. All right, now take a look at the 4-hour time frame. Let's quickly note here that the most amount of volume is right here at the price point where we're at right now. Okay, so between 2070 and 21 is a close approximate, just say maybe 20 and a half and 21. And we have a high amount of volume, most averaged out as about $21. So that's somewhat of a resistance. We broke above that level. Instead of coming back down to test it and continue higher, we lost that level. Okay. Now, that's typically not a great sign, but there's a few other things we want to be mindful of. Money flow index is still high, so even though the price is pulling back, this is kind of normal, and it's okay when the money flow is still up. The RSI is tapering off closer to 50. Not a great sign, but when it kind of hovers in the middle, it's hard to get validation on which side it wants to go. MACD is starting to diverge. Okay, we're starting to see that loss of momentum, only because these two 4-hour candles are pretty strong. Okay, you got to recognize this, and you combine this with Bitcoin, it's following Bitcoin fairly well, fairly close. So you got to recognize this massive sell-off is coming from the result of Bitcoin pulling back. Okay, so try not to over-concern yourself here. This coin is still in good shape, but if Bitcoin happens to sell off to 36, 35, 34,000, we will see somewhat of a reckoning. Again, it'll probably be candlesticks that look kind of like this here, very aggressive, that come down to hit a certain key level support. Good news is $19 is a pretty good support based on previous resistance. Okay, so we should be in good shape even if we double bottom out here. Okay, either way, expect a pullback. What is it? Expect the worst, hope for the best. My grandpa always taught me that, and it's served me very well. It works very well in trading. So we always want to hope for the worst. No, sorry, hope for the best. Apologize, and expect the worst. So in that sense here, we kind of take that mindset. Where are we at right now? Well, TD sequential, we're not really in a situation where we're overextended either way. Okay, that's good. We did get rejected by the 50-day SMA, tentatively holding above the 20. So it's kind of like that little compression zone we were seeing. And if we take a look at some of these levels here, why don't we go ahead and pull this out here. Just go ahead and kind of note that we are descending somewhat And this chart is fairly janky, honestly. It's creating lower lows and lower highs. You could even argue that we have somewhat of a flag pattern. Solana has a very similar pattern here where the price action is due for a breakout. Okay, so there's potential reality there, but we need further consolidation at this level until if we break below $20.50, it might be a cause for concern, but where we're at right now, I'm not overly worried. Let's get confirmation though on the hourly and just call it a day here for you. Thanks again so much for sticking around and watching to the end. If you did, comment below. I'd like to hear it from my my real members, not those folks that show up, try to fast forward to the end to get the prediction. It's not really what it's about. It's about learning how to become a better trader and doing this for yourself. If you're looking for shortcuts, that's really not the way to do it. So when it comes to the hourly, we look at one key factor, at least. Well, there's a couple, but this is the biggest one for me. So what this does, this tells us here that the lagging span intersecting with the price action, there's no reason to take a long position. In fact, you should probably consider trimming your long position if you have one open. The conversion line's above the baseline, but not for much longer, and we are above the cloud. So we technically have 2 out of 3 indications to leave a long position open, and one of them, the initial one, kind of letting us know that you might want to consider taking profits. Okay, so do with that as you will. Me personally, we have a long position open from Avalanche. We averaged out really nice when we got that little dip here recently, and I can tell you that we're still in really good shape. So I'm not concerned with that. Even if the price does pull back, we are set up to be able to sustain these types of momentum because they're low leverage trades, 5x, 10x tops, okay? Again, they look a little something like this here, just to give you perspective. What would our Matic trade, 12% one day, AVAX 1 hour, 6%, ETH 22%, 5 days, Matic 1 day, 12%, ETH 22%, 6 days. As you can kind of see, these are our scalping trades, but our swing trades, like for example, Crow, we took 27% in 18 hours. Prior to that, we took 32% in 2 days from Chainlink. These are all automated systems or automated trading signals that I send out. The swing trades are, of course, my trades that I take that I manually handle those. But the plus trades are fully automated day trades. So again, what I'm getting at is those are low leverage trades, okay? We'd see a lot more liquidation. We'd see a lot more stop losses if we used massive amounts of liquidation. So please just be careful with who you trust. I get so much, a good handful, at least 5 or 10 people every week asking me for help to recover their portfolio because they trusted X, Y, and Z who's doing 100 to 200x leverage consistently. Yeah, they're not posting the losing results though. Anyways, enough said, sorry, leave that alone. Last but not least here, be sure to check out our partnership with Bitunix. Phenomenal exchange, no VPN, no KYC, and it's a great option for our traders in the US, Canada, etc. You get a free $20 bonus if you use my link to register. First 100 spots apply. That's available until November 30th. All right, folks, thanks again for watching. Hope you have a great rest of your day. Thanks again for your time. See you next one. Take care.